So I thought we'd kick things off with, if you weren't aware, early this morning, our time, the head of the SEC and the head of the CFTC spoke in front of the Senate Finance panel, and it was a very interesting 2+ hour long discussion. I'd just like to see if anyone has any comments. Anyone caught it? Only read prepared remarks?
Scott actually wrote the entire hardly.
Sure. So I don't know if you guys read the 21A report, but kind of embedded within the 21A report was this mention of, if you're a platform, that you should be considering whether or not you should be registered as an exchange or an ATS. And if you listened to the hearing this morning, Chairman Clayton repeatedly talked about gatekeepers and exchanges and these types of, kind of periphery entities. And so I would be betting that since this was on his mind, this is probably where the next enforcement action is going to go.
Start. Before I make any comments, I need to say a disclaimer. I am speaking in a personal capacity tonight, not on behalf of the Commission or the staff of the SEC. I would just like to add that.
Can people hear him in the back?
Yes. You can get the mic.
We got a no. We got a couple of thumbs up.
So I just want to kind of add to that I thought the chair's comments did stress the kind of the delicate and deliberate thought being put through the regulator and the agency with respect to capital formation issues and trying to balance that with investor protection. So trying to serve the kind of multifaceted mandate of the Commission. I don't think it's lost on anyone how efficient of a means of capital formation the auctions and the capital raises have been vis-a-vis the blockchains over the last 18 months.
So I guess I should chime in here since I'm neither a lawyer nor a former or current regulator. But I have been in the industry for a little while and a little bit of context about Nasari. We're basically trying to build an open source Edgar-like data repository for the universe of crypto assets. So what would it be like to reverse engineer a 10K or an S1 for one of these new token offerings? And importantly, how you think about ongoing disclosures and self-regulation in an environment that kind of toes the line between securities and commodities, which is what I think we saw a lot of today. And I think the short answer was Clayton basically came right out and said, these are all securities, all token sales. And he repeated it a couple of times. So I think that probably gives you a little guidance in terms of what the SEC is thinking. And then you had Giancarlo on the other hand, who I think the crypto community wants to elect as our next president, for basically saying that he talks about Bitcoin at the dinner table with his kids, and we should be respectful of what the younger generation is thinking in terms of this new innovation. So definitely a mixed bag, but just so you know where my kind of very foreign perspective is coming from. As an industry, how do we abide by the spirit of the existing regulatory frameworks and try to build a better version of what currently exists, but tailored to this specific asset class?
I think you saw the statements very much reflect the agencies they represent and their own background. So Giancarlo, the CFTC deals with a lot of volatility, and that was one of the things he mentioned. Yes, this is a very, what we see in cryptocurrencies is very volatile, and maybe you don't see that in NASDAQ even in the last week. But we see some very, 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 very high betas and a lot of volatility. So they're kind of used to certain thresholds. And FX is, foreign exchange is a less regulated adventure, I guess, than the stock markets in many ways. For instance, Giancarlo, the commissioner, mentioned, we don't regulate a spot market. And wouldn't for cryptocurrency either. So on the other hand, the commissioner for the SEC, I think he was in private practice before that, mostly dealing with public issue, IPOs, and capital markets and public issuances. When you're trying to sell $1 billion of stock to the public and these very, very lengthy disclosures that are really the cornerstone of securities laws and disclosure and investor fairness. So, and coming at it from that attitude. Now, the token sales, they certainly don't look, most of them, like a lot of equity sales. The way that, when Apple wants to sell some more stock or something like that. But a lot of them do look a lot more like securities fraud. And whenever that happens, the SEC is sure to be there. And one thing to recall is that, at least from a lawyer's perspective, I would say that the federal courts do like to agree with the SEC when they're trying to decide what is and isn't a security. And that seems to be the history of it. We can go back to something called whiskey. Well, I'm trying to remember now. It's a whiskey warehouse receipt. And this was going back to the 1930s, and I believe in the late 60s. Finally, the SEC actually had a federal court ruling that said that if what you're trying to do is sell the rights to whiskey that's currently being sitting in a warehouse, but later is able to be distributed, that's going to be an investment contract, even though the whiskey is, I guess, today's utility coin. Right? And you have the case in 2000. I'm trying to remember it, but I love it, so I always repeat it. Where there was this offshore game company, and what you did is you invested in companies that didn't exist, and they told you that you were investing in companies that didn't exist. Instead of IBM, it'd be IBH or something like that. And lo and behold, the people playing this game were making a lot of money, and they could take their dollars out, and it was amazing. It would pay dividends. And what it was a large Ponzi scheme. In other words, the first people playing the game would get money out. They told their friends put money in. That's where the money was coming out. And so one day, everybody went to their PC, and there was no more game, right? And the SEC somehow got to these people. And the point is, the federal court said, yes, this was securities fraud, even though everybody knew that the companies were getting traded and the securities were not real companies or shares. So to a practitioner like myself, it means really take heed about how the SEC is approaching this and how they are construing it. Whether or not you see particular flaws, it's going to be a long time before we know whether or not federal courts agree with them, and they do tend to agree with them.
So do you mind if I ask a question?
Yes.
I was curious, because I'm here in part for an education myself.
Afraid of that, I was here for
And so I just happened to notice that you said that the ICOs, let's say, over the last 18 months are functionally different than how Apple would go about issuing equity. Can you walk me through the distinctions? Notwithstanding the fact that it's obviously not through registration, all that process, but really the kind of major pillars of steps in the process. What are the major distinctions?
No, I would say the major distinction between the token sales that we've been seeing, and there's more than 1,000, right? So let's lump them all together. The major distinction is that they're not, that you are not getting equity in the company as we have grown to understand.
So it's more of the rights and obligations in connection with the instrument.
It's the people building the team might end up building something that you should be able to use the token with at some point. But the company itself is, or the team itself is its own enterprise. And you're not to expect a dividend or an ownership interest in that. I would say that's the major.
Okay,
Okay,
no, I appreciate that.
test.
So it's not really the method of the offering, it's more what it is that this instrument represents. Is that what you're saying?
Yes.
Okay.